the market lifted by 233 points. For investors coming into the market, where's the better outcome, on the equity side or the fixed income side?
Yeah, the equity, the fixed income markets have been doing pretty well, with the CBN coming up to restore confidence in the market by nationalizing the three rescued banks. We see a situation where the players in the industry really have confidence, and trade has been going on well. From what happened yesterday, the 3-year bond closed at 10.38, while the 5-year bond closed at 11.25, while the 20-year bond closed at 12.01. What actually happened is that we've seen a big rally at the shorter end of the yield curve, while at the longer end of the yield curve, investors are still taking being risk averse in terms of trying to see that they're not really getting the real return on their investment, talking about having a good premium because of inflation anticipation.
All right, now you talk about the nationalization of 3 banks. They'll be managed by bridge banks, and that restores confidence to the market. But in this respect, the CBN's also announced that they'll be extending their guarantees up until the end of 2011. How does that support these banks and the financial system in general?
Yes, as I said, the modern system of managing an economy, once the system you're managing has lost confidence in you, it may be difficult for most of their policy to crystallize in terms of permeating into the economy in general. But from what CBN has done, they initially gave a deadline of 30th September, but they found out that the only way they can achieve confidence in the system is to preempt their action, and they did. And I must actually give kudos to the man at the helm of affairs of Central Bank of Nigeria, because that's the only way. Else, most banks are already taking some precautionary measure, and if that shock has actually happened, it may be difficult for the Central Bank to bring the situation to normalcy.
Talking about the CBN, the Forex market, let's talk about what's happened with the Naira. The CBN's decision to extend sales to Bureau de Change to $1 million per bank per week. Just explain that to us.
Yes, you know that since the beginning of this year, the Central Bank of Nigeria have been trying to manage the exchange rate using the supply end. And actually, if you see what is going on, there's been a very huge gap between what is actually playing out in the parallel market and what is happening in the official market and the interbank market. At the time, I was personally afraid because we would have actually created a sort of interplay between what happened in the parallel market and the official market. That is seen as players going to access official funds and trying to make an arbitrage profit from the parallel end. So initially, CBN came up with $250,000 per week per bank to BDC. Later, they inched it up to $500,000. But my question has been, why 250 and why 500? Have they been actually to take a sort of study to actually know the real demand that actually putting on this pressure in the Nigerian foreign exchange? So, but the issue is this. If they have, on Friday, they just came up with 1 million as the maximum you can sell to BDC per bank per week. And actually what it did was that to relieve a bit pressure on the parallel market. Parallel market gained 1 naira, because earlier it was 68 naira per dollar, but as of yesterday it closed at 67 naira, and that's a very huge gap.
All right. Talking about all these reforms for the money markets, for stabilizing the banks, we've also just seen inflation figures coming through. So one would argue, you know, the CBN's doing something right, but are they doing enough to support growth, particularly through monetary policy? What are your views?
Just a few minutes before I came on to your program, we just got a figure that inflation has been moderated to 9.4. The big question is this: if actually the inflation is at 9.4%, can we support it with our economic value? In a place Nigeria, you agree with me that about 90% of the inflation we are suffering in this country is out of exchange rate pass-through. That's the people sitting within the church of their country determining the prices of goods being sold in Nigeria. So we need to do something within the real sector of the economy. Let me give you an example. If we can spend up to close to $1 billion to import rice in this country, then is it really a very big problem for the nation? But from what the present government is doing, talking about the President Goodluck Jonathan or the PDP administration, I will tell you that for them coming out with the power sector, I think by the time they do something about it, the manufacturing sector will pick up. And once it picks up, and we'll get to a situation where the country will be an economic hub for the sub-Saharan Africa.